Bismillahirrahmanirrahim. Innalhamdulillah wassalatu wassalamu ala Rasulillah. Amma ba'd. Assalamualaikum warahmatullahi taala wabarakatuh. Salam ceria, salam UiTM di hatiku. Welcome to the keynote session for the first International Muamalat Conference, IMAC 2021. This conference is organized by Academy of Contemporary Islamic Studies, ASIS UiTM City. For this session, I, Muhammad Arif bin Muhammad Daud, will be your host. I'm currently live today from Studio UiTM City. As usual, don't forget to like and subscribe the channel for more interesting and insightful discussion. Okay, the first International Muamalat Conference brings the theme of Muamalat in a New Normal. The world is currently in a state of adapting to the new normal as a result of Covid-19 pandemic. It is now called endemic. And this fundamentally changed the way of life and work. And as a Muslim, we are also particularly affected. As such, this requires innovative ideas and measures, especially from the Islamic Muamalat perspective in adapting to the new norms. But then, with tragedy come opportunity. There is a potential gleam of hope that comes with this endemic. When humans stop their daily activities for a while, nature is healing. Lots of humans shows their generosity, helping people in need. And so many good things happen, although we could not deny the grave impact of COVID-19, where millions of lives were lost. But then, we think it is important for us to move on and grab whatever opportunities available upon us. Hence, our discussion for today title is COVID-19, Impact, Prospect, and Islamic Finance. To discuss further, we have with us today our special guest that we bring from far, far away in Washington, D.C., of course visually, Mr. Abdullah Haron. I will introduce him a bit. So, Mr. Abdullah is currently a Senior Financial Sector Expert at the Technical Assistance Strategy Division, Money and Capital Markets Department, International Monetary Fund, IMF. His role and responsibilities involve planning, coordinating, and organizing technical assistance requests for assigned countries. He also participates in the Financial Sector Assessment Program, Technical Assistance, and Surveillance Missions. He is currently a member of the IFSB Working Group on Revised Capital Adequacy Standard for Islamic Banking Sector and the IFSB Task Force on Impact on Consistency Assessment Program. He co-authored a number of papers, the IMF board papers, the first one ensuring financial stability in the countries with Islamic banking in 2017, and core principle for Islamic finance regulation and assessment methodology in 2018. Brother Abdullah, I call him Brother Abdullah. Mr. Abdullah began his career at the Bank Negara Malaysia and then a number of banks in Malaysia. Prior to joining the fund, he worked as a reviewer at the Central Bank of the United Arab Emirates, UAE, where his main responsibilities include developing the framework for the establishment of Higher Sharia Authority, performing an ongoing and systematic review of the institution offering Islamic financial service, developing guidelines and regulations specific for Islamic financial service, and coordinating issues between the Central Bank of UAE and the Islamic banking industry. Mr. Abdullah was the Assistant Secretary General at the IFSB, Islamic Financial Service Board, for slightly over 10 years and held various positions in Bank Negara Malaysia and Commercial Bank for 12 years. He holds an MBA from Ohio University and Bachelor of Science in Liberal Arts and Science, majoring in Actuarial Science from University of Illinois, Urbana-Champaign. I can go on reading our distinguished speaker profile, but it would take me hours because of his excellent career. Hence, without further ado, I would like to welcome our speaker, Brother Abdullah Haron. Assalamualaikum and welcome, Brother Abdullah Haron.
Thank you very much, Dr. Arif, for the kind introduction. Can you hear me?
Okay, yeah. So, we can hear you. Okay, so as usual, the chat section is open if any of the audience have any question that you would like to ask Brother Abdullah. Don't worry, we'll go through the comment section and post this question to him at the end of the session. So, Brother Abdullah Haron, the floor is yours.
Okay. Bismillahirrahmanirrahim. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. السلام عليكم ورحمة الله وبركاته. Good morning, good afternoon, good evening, wherever you are listening to this inaugural International Muamalat Conference. And I'd like to share with you some of this, the impacts, prospects, Islamic finance in the context of COVID-19, and also the recovery going forward. Just to let you know that I'm not an economist. I'm the financial sector expert, so my specialization is on the financial regulation and supervision. But before we delve further into the financial sector, we have to look at the higher level on the economy, especially the world economy and how it impacts the COVID, and move on more specifically towards the Islamic finance intermediation. So before we go further, I would like to see whether you can scan using your phone. We start first with this survey. If it doesn't work, I'm not going to have a second or the third survey during the discussion, but just like to see where we are in terms of understanding the issue on the COVID-19. So please scan first, and then we will go into the result of the survey itself. So I'll give you about 1 minute, and after that we will see the result of the survey. So there are 3 ways to access to the survey questionnaire. Either you can scan the QR code on the right-hand side, or you go to the website itself and you enter the code, or you have to type a long access to the survey itself. So I'm going to stop sharing the screen now, and then we'll see the survey itself. Okay, I think it takes quite a bit of time. So this is where the result of the survey. So basically, there are most of you voted, there are differences on the impacts of COVID-19 between Islamic and conventional finance. And the other 34% indicated they are not so sure if there is any difference on the impacts of COVID-19 between Islamic and conventional finance. So there are 67 participants. So thank you very much for your participation in this survey. So I'm going to stop this sharing, and then we go back to the session of the presentation itself. So the presentation is divided into 6 areas. First, on the outlook, the global outlook, which was presented to the global actually last week by the IMF on the economic outlook going forward. Secondly, on the IMF, how the IMF respond to the COVID-19. And third, what is the impact of the COVID-19 and the policy to recovery that has been implemented by the government of Malaysia as well as the Bank Negara Malaysia. And we try to look at the inequality. What are the things that taught us during the COVID-19? So there are 5 things that I researched and found out, and then I will share with you some of these findings. And then we go narrow further on the Islamic economy itself, the sector that comprise the core services and products post-COVID-19. What are the potential of this product and services? And now towards the end that we are moving towards on the Islamic finance intermediation. I won't go into the details of the Islamic in details because I noticed in the agenda there are some presentation deals with the social and also the Islamic economy and Islamic finance. So it gives you an overview on all this, the outlook, the impacts, and also what are the prospects going forward. So first we go into the world economic outlook. The impact of the coronavirus is actually, it affects almost everybody, or even almost every country in the world. But with the support with the help by the international organization, with the fiscal policies measures and also the monetary policies introduced by the countries, we can see that the global economy is now moving towards on a firmer footings as millions actually benefit from the vaccine. But the vaccine itself, the vaccination itself is uneven. Some countries have moved towards the booster, but some countries, as you can see later in the presentation, they have not even reached 10% of the vaccination of their population. So in general, I would say the global economy is moving towards a firmer footing. Secondly, the outlook itself presents challenges related to the divergence in the speed of the recovery, both across and within the countries itself. It's not just from the economic, but you have to look at the social impacts as well. And financial stability risks are in check. As you can see, before the pandemic, the 2008 and 2009 crisis actually has resulted some international standard setters. They have come up with several measures, particularly on the Basel III implementations, and this is where the financial stability risks are in check. But it is not immune to the current pandemic. So it has to be addressed, some vulnerability that exposed by this crisis to the financial stability. So we will discuss briefly on this going forward. And also supporting emerging markets and developing countries is actually an urgent priority right now because as you can see, uneven vaccination among the population across the world, this is where it becomes an issue because we are not living in isolation. We are living as a globalized industry, I would say, and we depend on other countries as well. So that's why you can see a disruption of supply chain is an issue globally. So this is where we need to support the emerging markets, developing countries, so that the global economy is moving towards a firmer footing. Next, we look at the rather more focused areas, or like the recoveries itself. As you can see, the global economy is projected to grow about 6% this year, and it is going to be a decline about to 4.9%. The growth is still a growth, but because of the base is now higher, so you can see the growth is 4.9%, slightly lower than the current projection of 5.9%. But as a result of the supply chain issues right now, you can see the inflation rate is increasing rapidly in some of the countries. And even some of the emerging countries also feel the pain of the inflation. So this is some of the issues that the authorities are concerned. Because if you start if the inflation rates increasing, so the base rates have to be increased, or in the countries itself. But if you start increasing the interest rate in the countries, then it has an impact to the consumer as well, because the housing, the housing is going up, and other things are start going up as well. So this is where they have to strike a balance because of the increasing in interest rate and its impact on other areas. The rapid spread of Delta and the threat of new variants also increased uncertainty about how quickly the pandemic can be overcome down the road. So that's where you will see that the booster is becoming something that some of the countries are trying to offer to the public, and this is where we are trying as much as we can to overcome this pandemic. As you can see here, the virus, the COVID-19 actually resulted in death, especially at the end of last year. That is, it reached its peak. And then with the Delta variant and others, it picks up again. And now some countries have already required the booster. So hopefully it will be contained down the road. So you can see on the left-hand side, the graph on the confirm of the death itself is like going downwards in terms of the number of deaths. So hopefully the situation is improving down the road with the boosters and other vaccination in other emerging market as well. And you can see on the right-hand side, the vaccination. Globally, you can see most people have at least one dose, about 45%. But if you look at the low-income countries or developing countries, it's not even, the single vaccination is not even 10%. So this is where is an issue right now. And then the IMF, the World Bank, and other international organization is trying to work together on how to provide this vaccination to the other countries which are severely affected and they have not even had even a single dose of the vaccine. So you can see there is a divide, between an advanced economies towards the low-income economies. And alhamdulillah, in Malaysia, I'm speaking about Malaysia, we have been reaching even much better than the advanced economy itself. We have reached like more than 90%. In the advanced economies, on average, you can see here, even the fully vaccinated is about 60%. It's not so much that they do not have the vaccination, but people choose not to be vaccinated here, even in the US itself. So So this is where it's becoming an issue. It's like for us here in the US, we can just go to the pharmacy and then just make an appointment just to get the vaccine, whichever vaccine that we want for the COVID. So this is where we have more supply than demand itself compared to other the rest of the world where they have to wait for the vaccines itself to be ready in the country. Now you see the impact of the COVID itself on the global activity indicators. As you can see towards the end of last year, the impact of the COVID resulted in the decline, a number of activities, even the industrial production, manufacturing, services, they are all at a declining stage. Even to an extent of the services itself is like more than 20% decline in terms of the activities. You look at the labor market on the right-hand side, the employment rate is declining by about 6%, particularly on the prime age youth. This prime age youth is between 25 to 54 of age. And as you can see also, the low skills laborers are even more affected. So that's why you can see the COVID-19 itself has a major impact on the labor market. And even that is also, even today, we still have an employment rate in some of the countries still higher. And we have not even reached at the pre-pandemic level. Now you can see the impact of the COVID. As a result of the COVID, people are working at home, and the students studying from home also. We look at the internet access around the world. As you can see, in advanced countries, the level of the access of the internet is much higher. Even in 2014, vis-a-vis the level 2019, they have already reached about 90%. So you see the blue dot on the graph on the left-hand side. You look at the low-income countries, even from the 2014 to 2019, they have not reached even more than 20 or 30%, I would say. So the access is very limited. I have experienced when we provide the technical assistance in some of these countries, whereby when we provide the technical assistance remotely, we have to use the WhatsApp, to teach the central bank staff, and even sometimes we are not able to communicate because of the access in their countries. So you can see the challenges facing by the low-income countries when it comes to the access to the internet. In the case of Malaysia, based on this based on this graph, we have reached about 60% in 2014, and in 2019 we actually reached about 90% internet access. So Malaysia is moving much better, I would say, in fact, towards some of these advanced countries in terms of the access to the internet. School closures and the enrollment on the right-hand side. As you can see, in July this year, in the advanced economies, they have already fully opened the classes, say about 40%, and even partially open for the others. But if you look at in the emerging markets, in the developing economies, though that they have opened and also partially open, there are still in these countries, the academic break is still on. And some of the countries, they are still closing the school. So the pandemic itself resulting in a great divide, I would say, if you compare relatively, across the world. So this is where the result that we have studied in the IMF and this is a concern because it's going to be a big divide further down the road. Inflation trend, as I mentioned earlier, because of the supply chain issue and limited products in the market, so the price is going up. So if you see even in the advanced economies and even in the major emerging markets, you can see that the inflation rate is going up. So for the policymakers in the countries, they have to catch up with the inflation rate. So some of the authorities, some of the countries, they start increasing the rates, the best lending rate, because the inflation reached the unprecedented level, even before the pandemic itself. So this is where a concern to some authorities, and you can see that some of these government trying to contain the increase in some of this the basket or of the CPI itself. Particularly now that you can see the oil prices start going up, so it will have an impact to some of these countries. So as a result of this, the prices, the oil prices, you can see the food prices inflation and also is increasing, and some countries they do not have the food security. So that is even more problematic, because when during the pandemic, the countries are like self-contained and they are not able to get whatever from the outside of their country. So the impact is quite severe in some countries, which resulting in the security issues, the food security issues. Now we are looking at the financial condition itself. You can see the global financial condition from the 2019 to 2021, as we speak today. The policymaker start easing the monetary policy. In other words, they start decrease the lending rate. As you can see from the left-hand side, from 2020 to 2021, this is trying to ease the market. You can see the key drivers in the financial condition there. So some of this, like in the emerging market, just focus on the emerging markets, you can see the decline in some of these, the rates, the interest rates, the housing prices, the corporate valuation, they are all declining at a rate like 0.5%. It is more severe if you're looking from the United States, from the Euro area. So it's even further decline. Because I remember last year when the pandemic started, the unemployment is about 14%. So that is where it's very severe to an extent that you are very scared to walk outside the house, because you never know who will be trying to harm you. And even some of the offices, they start covering the buildings with wood, so that there is people who are not going to break up the buildings. So this is the scary part, because if you're looking from the 14%, so I would say like 1 out of 7 people on the road are jobless. So this is where you see the impact of the COVID. In the development of the emerging markets and low-income countries, as you can see on the chart at the top left-hand side, you can see that the policy rate is increasing, and the inflation is declining. So it's kind of like the opposite in the advanced economies. 60% of the low-income countries are already in or near high debt distress. So because of the unemployment are so high, the government has to step in, and in order to finance the government budget, so the government has to get to have to issue the government sovereign debt, for example, in some countries. But this is becoming a problem also, because they cannot restructure the debt because during the crisis right now, the rating of the countries especially is even worse. Some of them are moving towards the junk bond rating. So it's even more difficult for the countries to even try to restructure the loan. So what more to to service the debt payment, which is in terms of the coupon payment itself. So you can see that in 2021, you can see is the share of the low income countries is very high in this situation. The other charts, in terms of the interest, the real rates in the emerging market, on the top right hand side, you can see the rate is expected to go up higher. The emerging markets in terms of the term in response to the US real yield rate, so it's expected to go high up. So that's why in Malaysia, I would say that right now you can see that the rate has not changed yet. So we can anticipate down the road there will be an increase in terms of the interest rate. So if we are the borrower based on the floating rates, so it's now time to try to settle as much as possible our debt when the interest rate are very low. But then down the road, when the interest rate start increasing, especially the floating interest rate, this is where the borrowers are having a problem, especially on the SME and the corporate sectors when they are borrowing on the floating rates. So this is where it becomes an issue. Okay, now we look at the housing prices. If you look on the top left-hand side, Malaysia at the bottom, the third at the bottom there, the price increase, the housing prices increase is not that severe compared to other countries. The house price is very high. It's like increasing to 20%, especially the New Zealand. And I think recently the New Zealand has to increase the rate, the base rate, because they have to keep up with the increasing inflation in the countries. So the same also in some other countries, if you see at the upper chart there. Indicators on the rapid price appreciation, you can see in some of these developing countries, the price to the rent ratio increasing, and also the house prices also to the personal disposable income in some of these selected countries are beginning to increase. So the increase in terms of the prices are beginning to be felt not just from the advanced economies, but also towards the emerging and developing countries later on. So just be mindful that as the pandemic is going to be over, the recovery are going to take place. So the rate, the base rate or the discount rate, whatever that you want to term it in various different countries. So these are beginning to increase slowly. On the fintech, you may have experienced that the fintech, everything has to be online during the pandemic since last year. So the asset growth for the fintech, is increasing. So this is not going to stop here. It's going to continue further. So this is the output, I would say, the outcome or the prospects of the pandemic itself. The fintech is going to be here for forever, and it's going to be like taking place some of the physical transaction in the market which we have experienced before the pandemic. But on the other side, you can see the non-performing ratio for the banking sector is slowly creeping up. Right now, we are very fortunate if you're looking from the banking sector in terms of the asset quality. because of the moratorium, because of other measures introduced by the authorities. So the NPL right now still looks good, but the moment the measures are taken off from the banking sector, you can start slowly seeing that the non-performing asset ratio or the non-performing loan are start increasing slowly. So that is why in some countries I noticed that the government, the banks are not willing to lend to the public sector. They would rather lend to the private to the public sector. So sorry, the banks are not willing to lend to the private sector, but they are willing to lend to the public sector, which is the government or government-related agencies. And some of the countries I noticed that they do not want to lend to the they do not want to lend, but would rather to buy the government securities. So I noticed some of the countries even like 50% of the bank balance sheet are in the government or government-related securities. Because one thing for sure that with this government securities, they can just simply sell it to the market and then get whatever return based on the prices that they sell. So if the interest rate start increasing, that because of the inverse relationship between the yield and also the price of the government securities, so they will start unloading their portfolio on these government securities and probably start looking for alternative investment or alternative financing to the public or to the private sectors. So you can see that some of the banks nowadays, the performance are quite good because of the fact that they are holding a lot of government or government-related securities. Okay, so I think it's a 9:40 now, so I will try to a bit faster. So this is where the cryptocurrencies also start increasing during the pandemic. People they're staying at home. Some of them like start trading the crypto, especially the Bitcoin and other currencies. So we track the volume of the crypto assets all over the world. So this is the result. As you can see, it's the volumes of the crypto is actually increasing. So this is something that it's worth pursuing further. I do not know what is the volume like in Malaysia, but this is a globally traded volume of the cryptocurrencies. And it comes with the risk. So these are some of the risks that we have identified, and also other factors pertaining to the cryptocurrencies. And you can see the mining of the Bitcoin activities by countries on the bottom right-hand side, and also other aspects of the crypto. So I won't go into the detail. This is the second section of my presentation. So basically, the IMF has been, I remember last year when the pandemic started, and then my managing director in mid-March saying that on Wednesday saying that, okay, by Friday everybody has to work from home. So you can imagine like we have to switch automatically from working from the office to working from home. Before the pandemic, we can also work from home, but then again, with the pandemic, we are forced to work from home. So until today, we have not been working in the office. If I want to go working in the office, I have to get the permission from my management that I want to work in the office. So I'm still working at home until today. So what we did is that since the pandemic started last year, we have responded quite fast, despite that we are working from home. Everybody's like working from home at an unprecedented speed, I would say. And we provide the financial assistance to the member countries. So we have been given, like, when when we receive like application for financing by the countries. So we have given like 1 week to process the financing, and within 1 week we provide the funding to the countries. So we provide the emergency financing to date to 80 countries. So out of 190 members of the IMF, we provide in 80 countries emergency financing. On top of that, some of the countries they have a debt with the IMF, so we granting the debt relief. The debt relief, meaning to say that we delay, we allow the delay in terms of the coupon payment and other aspects. So this is where the response that we provided to the countries, and we also provide a bilateral debt relief on low income countries as well. And also recently we have we call for a new special drawing rights allocation of 650 billion to meet the long-term global asset needs, because we feel that the countries are still in difficult situation when it comes to the cash, when it comes to the liquidity. So this special drawing rights giving the countries to access the liquidity from the IMF with no obligation, but they have to keep the receipt. So that is the situation. On the other side, we have already established a short-term liquidity line. If there is any request for short-term liquidity, so we provide to the countries itself. And also we enhance the existing lending programs to accommodate the needs of the countries. And also we provide policy advice. Sometimes, we work around the clock. If there is any emergency advice request by the ministry, by the Minister of Finance, by the central bank governors. So this policy advice during the crisis is actually unprecedented. And also at the same time, we continue providing the capacity development to about 160 countries. Like some of the authorities, they do not know how to, for example, when it comes to the financial stability, how do they supervise or regulate the banks in the countries online? So this is where we provide that capacity to the authorities. We also conduct the workshop to the authorities regionally as well. So during that period, everything has to be done quite quickly to help the countries during that time. And there are other action that has been taken by the countries after the assistance provided. And at the same time, they have taken the initiative themselves. And the countries itself, thank goodness, they took a decisive action as well to address the health crisis, to cushion the impact in their own countries. And in fact, some of the government also provide a sizable spending and revenue measures. In fact, you can see in Malaysia, the Ministry of Finance to providing a number of support to the public itself. From the central bank across the globe, they have taken several measures, the monetary measures, to preserve the stability of the financial system in terms of providing liquidity to the banking sectors, and also through the open market operation by purchasing some of these bonds. IMF Policy Action Tracker. So we took the initiative on day one, the moment the pandemic hit. We start gathering all the information from each central banks, trying to understand what sort of policy action they have taken, and when we share to the rest of the world on what are these policy action taken, so that other countries can help or can benefit from other countries' action. So that is where I also contributed on these policy actions, especially on the Islamic finance side, to look at what are the policy action taken by some of the countries, and then we put it in the website so that other countries can help themselves to choose what are the areas which are applicable to them. So these are the action, policy action that the countries have taken, and also we facilitate along the way as well. The other aspects of the IMF in relation to other multilateral agencies, we participate in the task force on the COVID-19. where we want to accelerate the access to COVID-19 vaccines. As you can see, in low-income countries, they are not even like 10% even for the single dose. So what this task force actually between the IMF, World Bank, WHO, and WTO is to help vaccinating the population 40% in every countries by the end of 2021 and at least 60% by mid-2022. It's not an easy task, I would say, because as we speak today, as you can see in the chart, they are still at 10%. So that's why we are calling the countries to donate some of these vaccine doses to other countries. So some of the countries start donating bilaterally. Some are donating the vaccine through a pool which have been created by this task force, and then the task force will be responsible through the WHO to disseminate this vaccine to the affected countries. So this is where the task force where the IMF joined to help vaccinating the rest of the world. So this is where on the COVID-19 in Malaysia, and I'll try to expedite a little bit. On the impact of COVID-19 in Malaysia, the unemployment rate actually declined from a historic high in 2022, but this improvement masked certain weaknesses. Secondly, the policy response has widened the federal government budget. Recently, you heard that the government has approved a temporary 65% of the government financings. Bank Negara Malaysia's substantial support has underpinned financial market stability with several measures. And also banks actually, as a result of the financial crisis 2008-2009, they have a sufficient buffer. And when the pandemic, the COVID-19 pandemic hit last year, they are actually in a strong position. And even the financial indicators have remained above regulatory levels. So this is where you can see the graph. In the interest of time, I think when you receive these slides, you can see or read yourself some of these measures and how it has impact in Malaysia. Just to give you briefly, the economy is expected to recover for the remainder of 2021. But as you can see, the inflation will be an issue. And this is something that we can look forward down the road. And on the bottom part, as you can see, the uncertainty of the evolution of the pandemic and the containment measures would affect the growth trajectory down the road. So we will see how the pandemic and also the measures undertaken by the authorities, and hopefully this will help the Malaysian economy further. But then again, given that the Malaysian is highly open economy, it is vulnerable, still vulnerable, despite of the fully vaccination. We are still vulnerable because of the escalating trade action and weaker than expected trading partner growth. Even if you have anything ready in Malaysia, but if you cannot export to other countries, or even if you cannot get the supply from other countries, you may have an issue also. So this is where the highly open economy of Malaysia is vulnerable to the external factors. So these are some of the policies to secure the recovery. So I broke it down into three separate policies, measures undertaken by the government of Malaysia, as well as the Bank Negara Malaysia, the fiscal policy, monetary exchange rate and financial market policies, and the financial sector policies. The COVID-19 itself also create inequality, and this has taught us about these 5 areas. Access to green space. So basically, access to the to the field, to the in Malaysia we call padang, health access and the outcomes. So the health access is going to be a challenging. We realize there are some issues in health access by the society. Digital divide, jobs in a virtual world, because now some of these companies are moving towards a virtual world. So jobs has taught us there are inequality there, and also accessibility and disability. So access to green space, studies have shown that the benefit of the green space and also on the mental and physical health. So this is where we are looking at the COVID from the social perspective. And one of the research in South Africa has shown that the white neighborhoods have 700 meter closer to public parks compared to other areas where there are predominantly black residents. So the neighborhood itself, which is closer to the public parks, is much better. In 2017 also, the German highlighted the inequalities in access to urban green space in relation to income, age, education, and the number of children in the household. 2010, also you can see the most deprived census community in the UK had an average 1/5 of the area of green space available to the most affluent ones. So basically, to the affluent community, they have access about 4/5 of the green space compared to the deprived community, which is only 1/5 of the green space. So you can imagine, like when it comes to the pandemic, you have nowhere to go, but in some jurisdiction you are allowed to go if you have a green space, or if you have a taman. So this is where it has a social impact as a result of the COVID-19. Health access is also an issue. There are a number of studies related to the health access following the pandemic itself. I won't go into the details. I think you can go for read it yourself later. And because when the pandemic hits, I think everybody becomes an expert in the health access, and I think you have already felt that how it has an impact to us individually, and it creates an equality, within the society, and also if you notice the inequalities also between the countries. Digital divide. So this is where we can see that, as I mentioned earlier, the digital divide. Imagine that people who have been working, in the office, and suddenly they have to work at home. Some of them, they do not have the internet access. So this is a problem in some of us, or even in some countries. So there is a significant disparity within countries and also across countries. So it's not just in like low income countries or developing countries. Even in the US also, there is a digital divide, because the differences actually affect between the urban and rural, and also along the income, age, and the race itself. So you can see here some of the surveys that has been done in the US. You can see that parents, like when they have the children, the school closed. So how do they, how do they access in terms of their education? You can see 29% of the parents whose children's school is closed, they access using the cells. And this is where the upper income, they have less issue compared to the low income. You can see the percentage there. And even to have access to the public Wi-Fi, and also looking at the students who are not able to complete their schoolworks because they do not have access to the computer. So you can see the COVID itself taught us about inequality based on this, the access of the internet. It's not just the education, but the jobs also in the virtual world. Also, there is a digital divide among the adult, between countries and also within the countries. So you can see that some of the people, when they work from home, they have problems with access to the internet, and resulting them not being able to complete the works. And this is going to be like an issue going forward if the organization will decide that they will start working from home indefinitely, and it's going to be like a great divide between the skilled workers and non-skilled workers. And you can see here from the graph on the employment changes, those who are at the bottom wage, they are actually severely affected since last year. You can see that those at the bottom age are affected about 37% compared to the the top wage quintile of the employment. So those who are at the top wage quartile of the employment, they reach at the pre-pandemic level just say about like 6 to 7 months, and now like the changes is almost nil, and they have already recovered. But you can see at the people at the bottom wage quartile, they are still the employment is still at the minus level. So they have not reached the employment. Some of those at the bottom, they are still unemployed compared to those at the top wage. So the virus or the COVID-19 itself is actually created more billionaires. And in fact, within the 9 months, according to one study, the top 1,000 billionaires, they have recovered all their wealth they had lost since the COVID-19 hit. Just to give an example, Jeff Bezos and Elon Musk, they even make more money now compared to before the COVID. So that is the reality right now that we have to see. And estimated of the total number of people living in poverty, they could have increased by between 200 to 500 million in 2020. And these people, they are not even returned to the pre-crisis level until 10 years from today. So you can imagine the divide as a result of the COVID-19. The poor become poorer, and the rich get richer. So this is where there is a study called the Inequality Virus pertaining to the society. And accessibility and disability research done in the UK has shown that 2/3 of the people with the visual impairment feel that they become less independent. So they need other people to help them because they cannot go anywhere. So they are really depending on other people's. And also 2/3 of the death that has been people with a disability in the UK itself. So you can see the COVID-19 taught us about what is the impact on the disability and accessibility. So 5 steps towards a better world identified by Oxfam. One of which is that the COVID-19 taught us that the world is profoundly more equal and measures what matters. So we have to see that we want the world that is profoundly equal, and also secondly, a world where human economies care for people. So that is that is the some sort of, I would say, the desire for a better world following the COVID. Third, a world without exploitation and with income securities. As you can see here, today the evidence is that the income insecurity is prevalent, even in our society, or even within our own family also. The income security is insecurity is there, and then we try to support each other. World where the richest pay their fair share of tax. Right now, the richest people in the world, I think they pay the less amount of tax because they know that the tax haven in some of the countries. So we, the Oxfam desire is that we want to have a world where the richest pay their fair share of tax, and also a world with the climate safety. So you can see that the climate issue, the climate change has already also impacted, and what more during the COVID, it is even more worse. So that's where the desire is to have a world of climate safety, and then we need to spend more on this the climate change agenda. So I'm not going to go this survey again. I think it's going to take more time because it's already 10 o'clock. Now we move to the global Islamic economy. So basically, the pandemic itself has resulted in a decline about 8% in the global Muslim spending. This study has been done by the Global Islamic Economic Report last year. The new report has not come out. Usually it comes out end of this month or early next month. So this is the old figures that I'm using here. But then again, you can see the spending is forecasted to increase at the cumulative annual growth rate about 3% down the road by 2024. And despite the havoc created by the COVID-19, the past year showed that many notable development in the Islamic economy. So this is a blessing in disguise, I would say, that the COVID has given us the opportunity trying to compete at the level playing field with the conventional economy. First, with the acceleration of digital transformation. So with the digital transformation, now everybody's like competing at the same baseline. You can see the fintech is growing, and also the disruption in the global supply chain. This is going to be, like something that the Islamic economy has to start, providing the supply to the rest of the world, especially the halal industries, and the increase of government focus on food security related investment. So this is something that I think recently even the Saudi start thinking about the food security investment. So this is something that we, as a Muslim looking at the Islamic economy, we have, this is the time that we are competing at the same baseline moving forward. So I'm just going to be quick here on the Global Islamic Economic Report. So I provide you the link at the end of this presentation. You can just read in details. I think some of these sectors, including the halal food, it is expected to grow by 3%. So increase by 3%. So halal industries is going to be is a major agenda, especially on the digitalization. Everybody's like trying to order the food online. Even here, for me, like I myself, before this, I tried. I find it difficult to get the halal food to the store that offer halal food. But with the pandemic, the food come to us. Even the halal meat also come to me, just at my doorstep. So that is where the halal food is, like you can compete at the same level playing field with other products and services. So these are the four key areas impacted by the COVID in the world of food. Basically, the legislation, supply chain, the channel, and also the consumption, the consumer and the consumption itself. So there are some variation in terms of how it impacts in the world of food. For example, just to go to the consumer and consumption, now people start buying in larger pack sizes. So this is something that probably we have to think down the road. We are not going to sell in a small items. We start buying in a large item. Fewer trips in larger basket, and also some of the consumer, they start piling in their own house. So this is where the impacts of the COVID in the world of food. On the financial services, as I highlighted earlier, on the fintech adoption, you can see, you can feel it actually with you, around you. Everything is at the fingertip in your phone. The digital banks, the online-based investment, like Wahid investment. So everybody now knows how to invest. Even I think there was a case last year whereby the investment, I think in the UK or in the US, whereby the teenagers actually they try to they try to invest in one of the share. They try to dump the shares. So the share prices that dropped like like crazy. So these people, like they just use social media, try to promote, try to sell this counter actually. So this is where it's becoming an issue. So we are thinking about some sort of like regulation where we can help the standard setters on how we can help some of these issues. This is unheard of before, but now this is something like an issue. Once you have fintech related to the regular investment at your fingertip. Travel, it's crippled during the COVID-19, but then again we expect it to increase down the road. In fact, some of us can't wait to travel outside the countries. Even like in Langkawi, I noticed people start like going to Langkawi on in other places as well. I remember one of my friends, he just stay now in Uzbekistan because he said that in Uzbekistan people can do freely, they can travel here and there, they can start eating at the restaurant. He doesn't want to go back to Malaysia at the moment until the Malaysian government start opening up. So you can see that the tourism has also has an impact on the COVID-19 itself, and it's about to recover to pre-pandemic level as anticipated by this report by 2023. Modest fashion. So this is something that people spend in the past. With the COVID, it's very slow because as we speak, we don't have to dress fully like we dressed in the office. So after this, the spending on the modest fashion continue is expected here. The Muslim spending on apparel to grow by 2.4% from 2019 to 2024. Pharmaceutical, the halal pharmaceutical is going to be a growing area, especially on the preventive care segment, because COVID-19 led to a renewed focus on the health and immunity. So this is where I think people are becoming more conscious. They start looking at the health, start exercising, and even for me here, maybe some of my friends know, the COVID is a blessing in disguise for me to lose about 20 kilos. So that is something that becoming more conscious on what I eat also, and also what exercise that I do. So other aspects on the cosmetics, the media has expected to to spend will grow at a 4% down the road. As you can see that it has a positive impact on the media because people start watching movies online, and I think the cinemas is closed. Even some of the cinemas here are still closed until today. And the Muslim spend on the media and the creation was estimated 200 billions, and now is expected to grow further down the road. COVID-19 and Islamic finance. So we are looking at the COVID-19, and Islamic financial services in the context of COVID-19. I'm sure you know that the Islamic finance is an intermediation. So they are playing an intermediate role between the supplier, between the demand, between the depositors, and also between the borrowers. And you can see the principle of Islamic finance helped the economy to avoid the crisis in 2008 and 2009. And it provides a strong safety net against exogenous induced cycle as we are facing today. So this is something that is of benefits to the Islamic finance to prove itself to the world that the principle of Islamic finance actually can help the economy. And Islamic financial services industries actually share the cost of downturns because COVID, it has no religion, so it impacts anyone. So that's why it is something that that is equal to the conventional industries. But in some sectors like equities, Islamic asset tends to perform relatively better because, as you can see, some of these sectors, I would say the counters in the equity, in the capital market, in the stock market, like for pharmaceutical, for example, is a Sharia compliance. So that's why you see that Islamic asset tend to perform better during this COVID. And the instruments of Islamic social finance, I think you are discussing in detail in the next couple of days. For example, zakat, sadaqah, wakaf, takaful. It should be coordinated together, integrated with the fiscal policies of the government to form a safety net and pro-poor expenditures. Because right now, these social finance are not, I would say it's not integrated, but it's not fully or highly integrated with the fiscal policy at this point. So this is where, in response to the COVID-19, I think the government start realizing that this form of instruments, it could help the government for the social safety nets down the road. And the IDB has played an important role between countries, Muslim countries, I would say. And they have committed to provide the funding packages to the countries, to the member countries. And they envisage a holistic approach over a long term to accommodate a number of sectors in the countries, considering the pandemics itself is not only affecting the health, but also it has an impact on the livelihood on the other peoples and a broader slowdown economy. And this is just a summary, I would say, the impacts and prospect of the Islamic financial services industries over 5 areas: the banking, the sukuk itself. I would like to emphasize on the sukuk here because down the road, I think the sovereign sukuk is something that probably is going to increase because the government need to, when it comes to the expenditure, so the sukuk, sovereign sukuk is an instrument which has an appeal to the government. But then again, in some countries, because of the ratings are poor, so they have to put on hold some of this sovereign sukuk. Otherwise, it's going to be very expensive for the sovereign to issue sukuk in the market. Equity markets, as you can see from the global perspective just now, and even the sector-wise. So it has an impact similarly, but then again, some sectors, they are performing much better. Liquidity, especially as you can see in terms of the capital market liquidity, you can see the spread is wider, especially the sukuk, the bid and offer. So you can see there is some sort of like liquidity in the capital market itself, especially on the sukuk. Fintech, digital economy, it's something that is going to be growing faster. So if the Islamic financial services industries is not taking the opportunity here, is going to lose, because this is where it's a reset kind of economy. So the conventional Islamic finance play the same role at the level playing field. Social safety net, as I mentioned earlier, zakat, sadaqah, microfinance. This is something that has a prospect going down the road. Initiative in response to the COVID-19 by the international standard setters. So the IFSB, the Islamic Financial Services Board, and the AOFI, the Accounting and Auditing of Islamic Financial Institution, they have taken a number of efforts or measures in helping the authorities in terms of enhancing the regulation, providing the technical assistance. So this is where they have played a significant role since last year. So I'm going to skip the survey, but this is where the IMF also played a significant role on the Islamic finance. We work with the international standard setters like the AOF, the IFSB, in providing our support, in terms of the policy, advice, etc. We provide the technical assistance to a number of Muslim countries, particularly looking at reviewing at the measures they have taken. And some of the countries now, they are reviewing their law and also some of the guidelines and the regulation. And as part of the surveillance, also we are also helping the countries when it comes to the some of the areas where they need helps on the specific areas. So there was a continuous dialogue between the IMF and the countries in this surveillance area. So this is where that the IMF play some roles on the Islamic finance going forward, and also now. So in summary, COVID-19, I want to emphasize that it has no religion. No single person, event, or community can be blamed for the spread of the virus. So the virus no religion, it affects everybody. And the COVID-19's related restriction have driven a change in the consumer behavior while accelerating digital transformation across sectors. So this is where the benefit, I would say the outcome, I would say the benefit of the COVID, my apology, but this is where the outcome of the COVID, it drives a change in the consumer behavior. And also it drives the digital transformation. And the Islamic economy, while losses mountain and uncertainty looms over the future, the opportunities in the Islamic economy are a silver lining in a world that is being reshaped by the COVID-19 itself. And the economy has continued to address the other pressing global challenges, such as inequality and climate change, which are only being exacerbated by the pandemic. So the Islamic economy it is an opportunity, but then again, because of other factors, it will have a certain impact as well. And the Islamic finance as an intermediation, with its inherent orientation towards supporting the real sector, will play a key role to support recovery efforts post-COVID-19. So with that, thank you very much. I'll pass to the moderator. And this is where the references I did not write down, so it's easy for you, when you receive it, you can just click and then you can go straight to the document itself. Thank you very much. Back to you, Arif.
Okay, thank you, Brother Abdullah Haron, for such an excellent, I would say, and very detailed presentation on the COVID-19, and I would say Islamic finance, Islamic countries, and also I would say the other countries as well, because we don't live alone. We are not living in silo, only Muslims living in the world. But then everyone, regardless of whatever their religion is, wherever they are located is, if not everyone is protected, there will be consequences for everybody, right? Okay, so for those who have questions, you may ask questions at the chat box. But then as an MC or moderator, I have the privilege of asking it first. So Brother Abdullah Haron, I'm just asking one single question. In your presentation, you mentioned about commodity and food price inflation. What do you think if this continue, commodity prices and food prices continue going up? Is there possible consequences like potential uprising that may occur due to this? Because we are talking about basic necessities here, food, right? If people don't have food, they may do whatever they have to do to get the food. What do you think?
I think in most countries, I think the food items are control item. So it won't increase that drastic. I would say it will increase slightly, and the government is doing whatever they can to control the food prices. In that sense, it's I would say that it's a comforting in that sense. So that's all I can say from that angle.
Okay, so we have question from the chat box. From Dr. Sanima Yahya. The first question from Dr. Sanima Yahya. What is the measure that IMF have taken to achieve a fairer global tax system? Especially in your presentation, you talk about taxing the rich, right? You need to have a fairer tax system, especially for the rich. So, in that context, what has IMF done in your knowledge?
I'm so sorry about this because I'm not on the tax on the fiscal policy area, but I think recently the G7 actually they have come to an agreement on the global tax agreement. I think with more than 100 countries. So this is something that we will look at it and probably once we get the details of it, I think my colleague in the fiscal department, the tax department, they will probably like look into the details on how the regulation come into play. So I'm so sorry, it's not my area of expertise on the on the fiscal area, but those are the information that I know so far.
No worries. The point is there is a movement, so to speak, towards achieving that lah in that context, right? Okay.
That is correct. That is correct. Because they don't want to ban because some of the countries they are reluctant to sign the agreement because this is where the rich they are trying to move some of their companies to that countries. So that's why the agreement that reached more than 100 countries is something that we are looking forward to.
Okay, next we have question from Dr. Farah Safura. Yeah, okay. This is quite a general question. How popular is Islamic finance in the US?
Islamic finance in the US is not widespread, I would say. It's only offered by the community bank, and we have, from my last count, we have like 7 community banks that offer Islamic finance, and even that also it's only focused in the Midwest and also on the west part of the US. And this is where the focus is specifically, for example, on ijarah-based or musyarakah-based type of financing. And one good thing is that I noticed, one of the banks that offer musyarakah financing for the housing, actually, they did not have, like the NPL, I would say. So they manage the portfolio quite well. So they're very selective in terms of the who they provide their financing, and also they work together as part of the community. So that's why here the Islamic finance is actually under the community bank.
Okay, so because I think the concept of community bank in Malaysia is quite I don't know how should I say, it's a quite rare things, right? Because we are used to big banks, right? But in the US they are more smaller banks, and there are community banks where community build up together to have a banks, so to speak. So the context might be different. So if you have more Muslim in a particular area, that's where the community banks for Muslim might exist in the context. Okay.
That's correct.
Have the world done enough with regard to this COVID-19 pandemics? Have the world done enough? What's your view? I mean, the world, the governments in every countries, the institutions.
Okay. That is why I think the IMF, the World Bank, the WHO, and the WTO they formed the task force. So this task force actually is trying to help the countries who are not less fortunate in terms of the COVID-19 efforts. So they're trying to help as much as they can, and I think there more need to be done. But at the end of the day, is the countries itself need to help itself. So that is where, like the international organization, they can try as much as they can to help, in general, but then individual countries that need to help themselves going forward, because the implementation actually goes to the individual countries.
Okay, so okay, we don't have any more questions. Oh, we have another questions from the floor. Okay, sorry, there's might be some error. I think that should wrap our discussion for today, Mr. Abdullah Haron. Thank you for your precious time. It's about what 10:30 in the US, in the DC. Okay, so thank you for your precious time discussing and sharing with us on the topic of COVID-19 impacts, prospects, and Islamic finance. From your discussion, there is a gleam and glitter of hope that will emerge post-COVID-19 pandemic, and I think it is up to us to grab those opportunities. Thank you again, Brother Abdullah Haron, for giving us the opportunity to learn. Inshallah, once COVID-19 is under control, or hopefully it will end soon, inshallah, we could host Brother Abdullah Haron here in Terengganu when he's back in KL, because he always come back here and forth to Kuala Lumpur. Thank you to organizer, Academy of Contemporary Islamic Studies, Assistant Editor MCT, and not to forget Studio UiTM for the venue and the live stream. Don't forget to like and subscribe the channel, channel Studio UiTM. For participants of IMEC 2021 conference, please join the Google Meet link according to your session. And for those who would like to view the presentation, can do so via ASIS UiTMCT Facebook. Don't forget, we shall meet again here tomorrow afternoon in the industrial forum discussion with two bright industry players with the topic of fintech. How does it change the Islamic finance landscape in Malaysia? Again, thank you, Brother Abdullah Haron, and thank you to all. I apologize for any mistake. Assalamualaikum warahmatullahi taala wabarakatuh.
Waalaikumsalam warahmatullahi.